What's going on, guys? My name is Brandon and I upload weekly videos helping you better understand your money. So if that's something you'd be into, consider subscribing. Anyways, let's get into it. Today we're talking about intrinsic and extrinsic value. Now, these are two vital aspects of options trading. Before we get into that though, if you haven't, I highly suggest you watch my most recent video where I gloss over these topics and give you a base understanding, because throughout this entire options trading series, we will be building upon previous videos. So definitely go back and check it out. I'll leave a link to it up in this corner. And yeah, let's get into it. So intrinsic and extrinsic value, as you can probably tell by their names, intrinsic is value already within the contract and extrinsic value is value from external factors. If you could exercise your option for a profit right now at the moment, then it has intrinsic value. Now for extrinsic value, there are a whole slew of factors that could go into an option's extrinsic value, but we're only going to be covering time decay and implied volatility today. Time decay is just how much time is left to expiration. Now, this is very important because if you have a contract that expires on the upcoming Friday, that contract is worth significantly less than a contract that still has 3 months till its expiration, because with the longer time to expiration, there is a higher chance of that strike price being fulfilled, whether if it's a call or a put. There's still a higher chance of the stock maybe going up to your strike or going down to your put strike. Now for contracts with, let's say, 4 days until expiration, their value is significantly less because the chance of their strike price being fulfilled is hurt significantly due to the lack of time left. That is time decay. A contract that is near an expiration has decayed over time. The next aspect of extrinsic value we're going to be covering today is called implied volatility. Now, implied volatility can make or break your contract, and I cannot emphasize how important implied volatility is. Now, implied volatility is a percentage of movement that is expected. For example, you often see a number like 45%. Let's just a random example. That means there's a 45% chance of the stock moving in either direction. It has nothing to do, it's not an indicator of which direction the stock is going to be moving, but it's just a sign that the stock has the potential to move. Why is this so important? This is a majority of your contract's value. Here's an example. Oftentimes people like to play earnings, right? You have a company that's about to make their earnings call and you want to get in on them because you think they're going to smash their earnings, just like you guys should smash the like button. But you think they're going to have a really good earnings call. So you purchase a call for them to go up, right? Now, leading up to that event, implied volatility is really high because events like earnings, new releases, those are all built into the contract's premium already. The implied volatility is really high because they expect these events now. So you purchase this call and, they have their earnings call and they killed it. They had great earnings, but yet your contract just lost all of its value. How did this happen? This happened because implied volatility collapsed. The event that was causing such a high percentage of movement has passed. So now your contract has lost that extrinsic value. And it's very rare for a contract like that to gain its value back. 99.9% of the time, it won't gain its value back. So you lose your investment. And as new traders, this is something you have to be careful of, because it's definitely happened to me many times until I came to the realization that implied volatility already has these events built into it. So you just have to be smart and not trade earnings. Trust me, don't trade earnings. Protect your account. I don't want to see any of you guys losing money. I'm here to help you guys make money. That's all for this video. I know it was a short video, but extrinsic value has many factors built into it, so I had to break them up. If I was to cover them all in one video, this video would be about 45 minutes long, and I want to save us the time. So be on the lookout for the next video. If you enjoyed, please drop a like, and if you're new, subscribe. I'd love to have you. I upload weekly videos helping you better understand your money. But yeah, that's all, guys. Take care. Peace.